Okay, wonderful. So thank you everybody for joining us in the VLab Talks. This session is hosted by AUC Venture Lab, the Fintech Acceleration Program, which is powered by CIB and the International Finance Corporation, IFC. And we're very happy to have with us today a group of entrepreneurs from our PayHack, the hackathon that we're running, as well as other entrepreneurs from AUC Venture Lab and also students and aspiring entrepreneurs. So it should be a promising session on digital payments. Today we have with us Kareem Abdel Aziz. Kareem is an industry veteran. He's been at IFC for more than 17 years. He's the head of he's the global head of digital payments and fintech investments, and he's leading all the new investments, new and existing portfolio investments for IFC in digital payments globally. So we're very happy to have you with us, Kareem, and very happy to have you actually share with us your thoughts on what's happening in that space. So let's just start from the beginning. What is digital payments and why is it important and why should we care about it?
No, thank you. First of all, thank you very much, Ayman. Good evening, everybody. Thanks for joining at this late hour. I'll try to make it as interesting as possible, keep everybody awake. What is digital payments? I mean, before I answer that question, Ayman, I'll probably start off with kind of what is happening in the world and some of the kind of profound trends that have global trends that have really had an impact on digital payments in particular, and why we're talking about digital payments and why there's so much innovation that is happening on digital payments in general. And the first global trend, which is often cited, but I don't think you can really overemphasize this point, which is by the Gsma metrics. If you look at the latest statistics for Gsma, there are 5.2 billion unique mobile subscribers in the world. Total world population is 8 billion. About 5.8 billion people are over the age of 15. So you are about to reach full saturation in the world of people owning a mobile phone. And the profound, and what's really profound about this point is that for the first time in the history of man, is there one kind of road or one interconnected platform where anybody can interconnect with anybody in the world. And if you think about these telecommunication infrastructure as roads, you've never had in the history of mankind one road that connected every single human being on the face of the earth. And that is what this telecom infrastructure really provides. And the reason why it's so important in digital payments is because this telecom infrastructure becomes kind of the base layer, the dumb layer for economic activity and trade. It allows for people, for me to be, let's say, sitting in Cairo, be able to pick up the phone and call somebody in Pakistan to deliver goods and services to me, right? But for that communication layer to be a real robust, kind of layer for trade and commerce, you need many other layers. So the first layer is payments, and particularly when you're talking about cross-border payments, you need foreign exchange type of capabilities. You need KYC information. So you need to know that the person who you're trading with is actually Ayman Ismail in Cairo and not somebody else, right? You need security features, you need taxation, you need invoicing, you need regulation to be embedded. So this infrastructure is really has a profound impact and potentially a profound impact on the global economy going forward. And it is really a pivotal moment in the history of mankind. I really say this not to be a cliche, but I really do sincerely believe that we are a very pivotal moment. And the trends that we see in Africa, you see, and with the mobile money penetration, you see it all over the world happening right now in a significant manner. Now, the other impact of this is that it's the first time in the history of man that actually finance, which was often regulated to financial institutions and was considered more of a vertical, like a sector, like you think of manufacturing, education, you think about healthcare, etc., retail, you thought of finance as a vertical. It is the first time that finance actually can be embedded within and become a horizontal and become embedded into every commercial transaction, not necessarily one that you have to go and get the finance or the payments or lending or insurance. You can actually get it embedded into your day-to-day life. And we can go further into those that discussion later in the conversation, but broadly, and to answer your question, digital payments is basically a communication layer on the very simplest form. It is a communication layer that sits on top of that telecom communication layer that is smart and is communicating a financial exchange between one party and another. And whether it is on a credit card platform, whether it's on a mobile wallet, whether it's on a wearable, it can come in many different forms. But what's common thread between all of those digital payments is that it rides on some basic communication layer, the telecom infrastructure here, maybe wireless, maybe fixed line, but it also communicates an exchange of value between one account and the other. And there is a lot of infrastructure that needs to be built for that to happen, and we can go into that in greater detail.
So this is very interesting, Kareem. So what's happening is a huge explosion in connectivity. Everybody's now connected, and then we're building the layers on top of it. And the core thing that's happening in payments is me being able to send you a specific amount of money with a verified transaction, with everything around that in the infrastructure. And then we can start imagining the possibilities of what that digital transaction that is replacing the cash transaction, where we had to go physically and exchange the money, or the bank transaction, which is a different process, what kind of profound impact it would have on commerce, on trade, on all those types of dimensions. So before jumping in and asking you about the key trends that are actually happening in that space, I just want to emphasize the importance so that everybody gets it, specifically on two dimensions. One, on the individual's life, everybody's talking about financial inclusion. What does that mean for people, and why do we care? And the second one, from an investment perspective, and that's where your world is, why is that an interesting and very timely investment space? So let's start with the individuals. Why should I care? How would it affect my life as just a normal day-to-day Joe or Muhammad or wherever you live?
Well, I mean, payments, cash, you mentioned cash, and cash has been around, or physical currency, if you will, even if you consider gold coins and et cetera. But that physical currency has been around for a very long time. And it was a very effective mode of exchange. If you think about it, even to this day, cash is a very effective mode of exchange. If you think about it from a user experience, particularly at the retail level. So I'm buying from you, Ayman, at the grocery store. You know, when I give you cash, you don't need to know who I am. You don't need any KYC information. There's no technological compatibility. So, I don't accept Visa, I don't accept MasterCard, I accept American Express, Visa, whatever. There's an automatic transferability. It settles right away. So that transaction will settle directly. There's no chargeback. So I can't come back afterwards and say, hey, no, this is a spoiled good, and a credit card company can take away that money from me. So cash is still, and there's no tax associated with it. Actually, from a retail perspective, you don't need to necessarily pay any tax. You don't need to pay any service fees. You don't have a point of sale terminal that you have to rent. So cash is still. And what people really underestimate is that cash is still, especially for offline commerce, is still a very, the user experience for cash is still a very good one. However, in this interconnected world that we talked about in the beginning, commerce is happening across borders, and commerce is happening not in the physical realm, it's happening in the virtual realm. And cash in that instance has significant limitations. So if in that example where I want to buy from a manufacturer, I want to pick up the phone, I found somebody on a website, I want to buy goods from a Pakistani manufacturer. I can't easily, with the cash that I have, I can't easily buy those goods. So just from a basic commerce perspective, it really has significant limitations, especially that there's so much growth in the virtual economy and that we're seeing across the board. So eventually a lot of commerce is going to happen online and not offline. And we even see it with the situation right now with COVID, where everybody's at home. Commerce is happening much more online. That's number one. Number two is, if I am only a cash user and there's no visibility to the financial institutions of, what I am doing, how I'm conducting my economic life, then they have a very difficult time in developing a profile of who I am and how much, financial services I am able to consume. And that basically makes me financially excluded. And they're unable to give me loans if I want to buy a car or if I want to buy a house. They don't have a sense of my credit worthiness. And digital payments gives you a footprint, gives you some sort of footprint that allows these financial institutions to create a credit profile that allows you to provide loans. Now, loans, it could be equity even, that I have some sort of view of who you are as an economic person within the economy. So it really does have a very important impact on that from that front. To your second part of your question in terms of an investor, why it's important is that, cash is still, let's say, so financial inclusion is a very important mandate for us. We think that people's livelihoods are improved by being financially included into the economy and being able to have access to loans and being able to access a lot of different types of financial service products, to be able to save their money that they have instead of keeping it in cash. They could be able to deposit it into an account and earn an interest rate on it, or to be able to invest in the stock market and to build a nest egg for their family members. So, for us, there is a significant development impact in being financially included. And we feel like digital payments actually is a great entry point into getting people financially included. And they've been excluded for so long because just the infrastructure that was available at the time that the banks were offering, particularly card networks like Visa and MasterCard, for simple payments, were not suitable for the types of uses that you would need in a kind of an emerging market context like Egypt.
So Kareem, this is actually an excellent segue to my next area, which is talking about, just before we start zooming in on Egypt and the region, just talking broadly to understand the global picture. So you started mentioning Visa and MasterCard. We see a lot of the countries that the US and Europe, the countries that were economically advanced, they built a big infrastructure for payments through credit card networks over the past decades. And that gave them a very nice actually advantage in terms of inclusion and in terms of having access to financial services in a near universal way. But immediately now in the most recent part, we started seeing countries like China where they did not have that type of penetration, kind of leapfrogging and moving directly into mobile wallets, QR code enabled networks between the Alipay, the Ant, and the WeChat. We started seeing a huge number of people, hundreds of millions, literally, getting into that digital space in the course of years, 3, 4, 5 years. We're not talking about even a decade. Over the past few years, we started having hundreds of millions of people. You can be buying a sandwich from a street vendor and paying with a QR code, or even giving just money to someone for anything in a local market and still paying with a QR code. So that near universal adoption, that ability to actually leapfrog from one generation of payments to another generation of payments is a very interesting story. So can you tell us what's happening on the global part, from the US and Europe, the countries that went into first generation, now moving to the countries that kind of leapfrogged, like in China, and to countries like us in the region, in Africa, that actually kind of pioneered mobile money in a way, in Kenya. Where do we play in that space? So just a big overview, and then we'll start zooming in after that.
Absolutely. So very good question, Ayman. I would say that, look, it's important to understand a little bit of the history here to be able to put where we are in that historical moment and where it's going. But there is, I think you laid it out very well, there are two fronts on this, let's say, battle for dominance of the global financial infrastructure. You have the US kind of dominance and push, which is mostly driven by Visa and MasterCard. And then you have the Asian predominantly pushed, driven by Ant Financial in particular, but you also have, you know, the Tencent and others that are also trying to make a push. But I would want to actually, to put this all into context, I actually would want to take a step back and talk about a historical moment in 2014 that has nothing to do with fintech payments or anything like that. But it was the actually the invasion of Russia into Crimea. So Russia invaded Crimea in 2014, March 2014. And that led to kind of a global outcry against that move. And the US imposed sanctions on the Russian banks that were operating in Crimea. And those sanctions basically required that Visa and MasterCard stop doing any business in Crimea. So if you were a Crimean national wanting to go across the street to the restaurant and, you know, and have dinner and pay with your Visa or MasterCard, it wouldn't go through. Even though you are a local from a Crimean bank account holder to another Crimean bank account holder, that transaction could not happen. And if we think about this infrastructure as roads for commerce, you could imagine that spurred in many, you know, there was a lot of attention to this, but it really spurred a lot of attention on ownership of domestic rails by domestic governments. So that, you know, imagine if you woke up one day in Egypt and realized that all of the roads that were in Egypt were owned by the US, and that the US decided to sanction Egypt, and that US companies could no longer operate in Egypt, so therefore the roads were shut down. Nobody could leave their houses and conduct any business, okay? And that is effectively what happened in the Crimea context. And the reason relevance for this in this context is that, you know, Visa and MasterCard for a long time had been giving legacy systems to banks in these markets to offer to their populations, mostly more affluent populations. And they dominated, even on the local level, dominated domestic payments. But what many regulators at that time realized is, wait a second, we can't have our domestic payment schemes beholden, or domestic payment infrastructure beholden to US interests or any foreign interests for that matter. So what you have in what has emerged since then, you have Visa in Egypt that has emerged. You have RuPay in India, Mir in Russia, many domestic payment schemes that have emerged where governments have really taken a serious look at owning that and being able to control that local payment infrastructure. And that trend is very important to kind of acknowledge. The other kind of trend is, you know, for when it comes to international remittances, a lot of it happens in US dollars. A lot of it happens through a very complex kind of network of correspondent banking networks that are mostly US banks. So anytime you have a US dollar transaction, it has to go through a US bank. And you have China, for instance, realizing that, again, for international trade, they don't want to be beholden to US interests. So there is a move by the Chinese to move into international markets and put a footprint and connect them on different rails, on their own Chinese rails. So that is when it comes to kind of big mass market kind of movements. Now, as it relates to some innovations that have been happening outside of the card rails, you need to really understand the Visa and MasterCard card rails were developed, you know, in the 60s in the US, and that business model really hasn't changed. And it works well in a market where you have significant saturation. But, you know, in some of our own portfolio companies, you notice that the card-based transactions actually do not make sense economically to reach some of the underserved segments in our market. So for instance, in Egypt, if you think about it, Visa and MasterCard works for the more affluent groups that travel, that need a card that they can be able to use internationally, that can be able to basically pay for their travel, whether it be business or tourism. But if you think about it for domestic payments, and if you think about it buying goods from a local store, your grocery store on the across the street, Visa and MasterCard, actually the economics of those cards don't lend themselves very well for those small amounts of transactions. There are heavy fees associated with them. They're very complex fee structures. They're US dollar based, so there's a currency kind of exposure there. And so that's why the banks for the longest period of time really didn't issue Visa and MasterCard for their lower, less affluent segments. Yeah. And that's where the mobile wallets that you're seeing kind of that have emerged in Africa, that have emerged in China, all of those lend themselves to probably reinventing kind of the economics of these types of business models. They can reach scale very quickly because they're all mobile based. They're not card based. You don't have a physical distribution associated with it. You don't have point of sale terminals that you need to deploy to be able to accept. And you can become a two-way street. So you can not only send money, so the card allows you to pay, but the card doesn't allow you to receive. The mobile wallet actually allows you to send money and receive money. And the biggest use cases that we see in emerging markets on mobile wallets is really the P2P transfers, which the card networks really couldn't do for the longest period of time. So for sure, you see innovations that are happening. They're happening at a local level to address local needs, and they are kind of somewhat bypassing the more legacy infrastructure that you saw before.
This is very interesting, Kareem. So we're talking about, if we talk about macro and big global trends, first one is a huge connectivity that's happening. Second one is that there are events and triggers like what you mentioned happen in Crimea, also happening with Iran and with China, where basically countries want to think about localizing that infrastructure to maintain control. And then third one is that the infrastructure that we have is kind of obsolete. It was based for the 60s, and now we're starting to see new models. And if you put those things together, then you're probably at a very clear historical point of inflection or disruption where you're seeing suddenly an old business model is being disrupted and a new opportunity is opening. And that's probably why we're starting to see a lot of the fintechs, but specifically a lot of the payment companies, and a lot of them are local and regional in nature, because that is part of what we need at this point in time. So I think that that's actually very, very insightful. If you can give us a couple of case examples of companies that you're seeing that are getting into that space, creating a local opportunity, at the same time, a great business model, bypassing that legacy infrastructure, and creating kind of ideas that are interesting for us to look at, whether it's in China and India and Mexico and Egypt and South Africa. And you have a global perspective on that. So I'd love to hear some stories that can actually give some of the entrepreneurs inspirations of what we can do in Egypt, especially things that may actually be a nice transfer or a nice idea to implement in an Egyptian or local regional MENA context.
Sure. I mean, I think, the couple of really big picture examples that you hear about a lot and are reference points in the market are kind of the Ant Financial or Alipay in China, which basically, in the context of the Chinese market, you had a significant amount of the population that was banked. But the banking services were still stuck in a very old business model. And what Alipay was able to leverage was its Alibaba relationship with Alibaba and its technical capacity. And it's think of it as like Amazon, how Amazon interacts with you as a consumer. Amazon has a direct link with you. And if Amazon Pay if Amazon wants to start to offer you financial services, they can do that quite easily because you already have a relationship with Amazon, an intimate relationship with Amazon. You're already transacting on Amazon, and a kind of an extension of their business could be financial service provider. And that basically was the impetus for Alipay, the same with WeChat Pay in China, that basically offered those consumers an ability to make payments, send and receive payments between wallets, and then expanded very quickly into a much more comprehensive full service offering. So, they offered interest returns on any balances that were retained on the wallet. They offered them the ability to invest in the stock market and other kind of investment instruments. And then they also gave them insurance. So it became a much more full service offering. And then it also allowed them to use that wallet at merchants using the QR code, bypassing. And the QR code, the beauty of the QR code is it allows for quick adoption on the acceptance side. You don't necessarily have to have the point of sale terminal and connect it. It's very costly. QR code was much more efficient in being able to build a very broad acceptance network in China. So that is one that I think for those entrepreneurs who are looking, this is a model that should be studied. Now, whether that is a model that can be kind of adopted in every market is a whole other question. But just I think there's key elements of being able to integrate into the economic life of the average Chinese citizen is what really made that a successful service offering. And to be able to understand what the alternatives were from the traditional banks and how you could improve it, and really studying those, kind of where the user experience kind of fell through and where it could be improved. That's what Alipay brought to the table. There is actually one company that we've evaluated in Senegal. It's called Wave. And basically what Wave does is, let me put this into context before this. What we're seeing in money markets is everybody wants a wallet. So you're seeing, the fight for the consumer. There's like this mass hysteria that people think that, they can do the wallet better than anybody else. And basically what the consumer sees at the end of the day is, oh, I've got like 26, 30 different wallet options on my phone. I can choose any one of them. And this one gives me a promotion here, I'll use it here. This one gives me a promotion there, I'll use it there. This is giving me cash back. And then you see in Asia in particular, you see deal seekers basically playing the wallets against one another, but none of the wallets ever reach a mass scale because they're all fighting for that little bit of market share on that user's wallet. And from an investor perspective, and I think we should get into it, but we've deliberately shied away from that because we felt like, look, this is going to play out one way or another. And the ones who are best suited to win that game, to be frank, are those who already have a commercial relationship with the consumer. So I mentioned Alibaba had already a commercial relationship with the consumers that they were able to offer initially their wallets to. Amazon has a commercial relationship with me. They could easily extend this. You see in the ride-sharing companies in Brazil and Latin America, Rappi has already kind of a relationship, or the delivery in Rappi in Latin America, Rappi already has a relationship and can easily extend that. Uber, Kareem can also extend their relationship into a digital wallet and have a much more robust kind of service offering than somebody who's just standing on their own and trying to build it from scratch. So that's I think an important case here. But if you do want to win in this game, or if you do want to play in the mobile wallet space, then it's really important to figure out niches that the rest can't offer. So many of the telco-led wallets or the bank-led wallets are everything for everybody. They're trying to be everything for everybody, and at the end of the day, they're nothing for anybody. I mean, they're really just in some markets where there's an extreme. You open up the wallet and you see kind of a menu of at least 1,000 different things that you can do, and you get so confused that you just give up. And where we think there are useful opportunities is where you find niche businesses or niche segments, and you understand those segments really well, and you really understand where their pain points are. And it is in those instances where you can actually generate a viable business model and actually survive. And that niche doesn't have to be just one niche. It could be multiple niches, but you understand who those niches are. So for instance, in Pakistan, there's one company, Naya Pay, that's looking at college students. It's basically only focused on college students. It goes in, and so when they identify college students, you know who they are, you know where they are, you know how old they are, you know where they are in their life cycle, you know what kind of social media they're using, how to attract them, you know, who their other peers are, you know, and you can create a viable business model just focusing on one segment. We have another company in Senegal called Wave that we were looking at that basically focuses on fishermen. In Senegal, there's over 100 fisheries are a very large source of income to the country. There's over 100,000 people employed in the fishing industry. You got it's over $300 million in market every year, and this business only focuses on fishermen, or at least it doesn't only, but initially focused on fishermen and tried to understand their trade routes. Where do they sell? Where do they buy? Where do they sell? It became almost like a B2B, but on a consumer level. And what you see is very high traction, very high retention. Unit economics are much better than those that are just trying to see a one-size-fits-all offering. So those are just a couple of examples.
I think, Kareem, this is very interesting, and I was going to ask you about this whole idea of the Uber and Kareem starting their wallets. And what you say, there are basically two opportunities. Moving from the bank model, where the bank is the one-stop shop for everything, now we're starting to get a bit of fragmentation in that space where a lot of people can get into it. And you mentioned two opportunities. One is kind of the wallet or the financial aspect as an add-on to your business. So a Kareem, Uber, Swivel, and the like, starting to have the financial part as an add-on because they already have the reach to a group of people. And the second one is focusing on niches and try to develop specific offerings for a niche of people who would, and you would be really focused in on those people with their behavior and needs and so on. And those are two very interesting areas for entrepreneurs to get in. And I think many of the ideas that we're starting to see and we're starting to push people is to build on that, to build on the infrastructure that we have, the railroads that we have in general. And in Egypt, we actually have a very interesting space where we had part of the regulations that was facilitating interoperability, forcing it in a way, but it made sure that even if you have 100 players, they're all playing together. So you're not getting islands of systems where people don't talk to each other. And it's actually a great way to facilitate the entry of the startups because they take the niche, but they're still integrated in the big picture. I wanted to get your thoughts on the regulatory part because we're getting so many different perspectives across the globe. Some countries are completely shutting down things and just having 2-3 players, whether state-owned or state-supported. Others on the other extreme, completely deregulating, and you find that in many African countries. So it's a great place to experiment, but there's a huge risk and fragmentation. Some countries are trying to walk kind of somewhere in the middle and with different schools of thoughts between the regulatory sandboxes to just creating regulations in some places to testing things with big companies that you know and trust to allowing some of your big banks to get into that space. So what's your thought on that, and also reflecting on it, on what's happening in Egypt based on your experience? How should we regulate an evolving space like that where we don't really know the answer, but we want to avoid systemic risk, but we want to open for innovation?
Exactly. I mean, I think it's important to set the context. I mean, the regulators are really struggling with this because it's a balance between innovation and security. And you don't want to be in a situation where, you know, you open it up too much and then your financial system, which controls your whole economy, becomes undermined. And particularly, and the different regulators have different kind of views and statures or positionings on this. I think, you know, the posture, at least in Egypt, is one of a more conservative posture than you would see in other markets that are a little bit more willing to take a little bit more risks. But that's not a bad thing. I mean, you just have to understand that this is a posture that, you know, the central bank has taken. It has actually fared well for the Egyptian banks for a long time. Egyptian banks were able to sustain the 2008 crisis much better than many other banks in other markets, even in more mature markets like Europe, etc. But when it comes to regulation, I think I would recommend looking at what's happening in Europe on the PSD2 and open banking in the UK. And basically what the PSD2, this is Payment Service Directive, which is a law that was instituted back in 2015, actually put into law in 2018. And basically what it requires is, it has many aspects to it, but the fundamental aspect that really was transformational was that it required banks to open up their accounts to a new category of payment service providers. Okay, and it itemized what those payment service providers are, and basically then broke this walled garden that these banks usually used to have. So if you're Ayman Ismail and you're banking with CIB, okay, it's not CIB that owns your account, it's you who owns the account, okay? And you can provide a permission to Google to be able to access that account and to be able to transfer money out of that account to something else. And this, in a significant way, opened up kind of much more competition. And for banks started to realize, okay, well, wait a second. It's not, with Ayman is now my, in the past, the way it was that Ayman was my client, and now I gave him the card that I wanted to give him, and he could only use the products and services that I offered to him. But now that Ayman is, with CIB, but basically Ayman can do, banking and can transfer that money anywhere he wants. It really created a much more vibrant and competitive landscape. And this is a model that I think many regulators in general are looking to implement, but they're still struggling to figure out how to do that. I think.
Someone needs to put it on mute. So if any of the moderators can just put Omar Salah on mute. Okay, go ahead, Kareem.
Yeah, so as I was saying, the PSD2 example would be the kind of the best one. I think we still have Omar in the background.
Sorry, guys.
Good to hear you, Omar.
Go ahead, Kareem.
Okay. So anyway, so I was saying, yeah, so I would leave it at that. I think PSD2 regulations are actually very conducive to creating a very vibrant market. I would actually also add the e-invoicing regulations that are happening, that are being introduced in Egypt actually recently. And you can see them in Turkey actually would be one where there's a reference market that I would study in detail on the invoicing space. But that basically automates it basically creates a framework for starting to introduce digital payments, not only from the B2C side, but what is often overlooked is the B2B. If you look at Egypt right now, I can assure you, I don't have the data off the top of my head. I tried to do some research actually before this discussion, but I couldn't get credible information. But I suspect a significant amount of B2B payments are still happening with checks, and that is uncharted territory. If you think the volume of payments between B2C is significant and has been the livelihood of Visa and MasterCard for all these years, just think about the size of the B2B market and how big that is and the opportunities there. And e-invoicing regulation that requires B2C and B2B of a certain merchants of a certain level to be able to declare those payments in a fairly itemized way to the tax authorities will require them not only to digitize those payment streams, but also to have ERP systems that can communicate with one another and do it in a more seamless manner, and that can manage inventory and can do a lot of the day-to-day, automate a lot of the day-to-day functions, so that there's a lot more record keeping that is going to be required for these companies. So I would say PSD2 and e-invoicing are the two areas that we follow closely and give us a sense of how ready the markets are for us to take a more detailed look.
I think that's very interesting what's happening in that space. And I think you're right about the regulators trying to balance innovation and security at the same time, and trying to think about innovative ways to open the space, because at the end of the day, it is in the interest of the government to have more of the informal economy moving into digital and becoming formal, which would feed into taxation sooner or later. So that's a direct agenda for everybody from the government perspective. Now, let me shift to another area, which is basically your focus, which is investing. What are you investing in these days, and why?
So that's a good question. Look, I want to be clear. The kind of the structure, the architecture of what we see of the fintech landscape going forward. Payments is definitely a base layer. So payments, that agenda is still very much greenfield territory. And despite how much you see on the consumer side, when I talk about B2B payments, for instance, is still untapped. When I talk about payroll, when I talk about other types of niche types of healthcare payments, for instance, is still untapped. There's in the US, at least I can comment, is that it's a very complex payment rail. That's very different than the rail that you would see on a retail front. So there's insurance providers that are associated with it. There's pharmaceuticals, and all of those need to be integrated into that payment flow. Same with education. If you look manufacturing, there's so many other sectors that each one of them will have its own payment rails that need to be automated in a sense. So digital payments is going to be the base layer, and we're very focused on it. In fact, half of our portfolio right now and half of the investments that we've done are all in digital payments. And then when you do get a basic kind of level of saturation on payments, so like Kenya, where you see, M-Pesa was able to build a fairly ubiquitous kind of infrastructure, then you start to see innovations on digital lending, and you start to see digital lenders coming to the place, into the kind of the landscape. You see microinsurance coming in as well. And then you actually start to see capital markets types of investments. So think about, investing in equities and bonds and whether domestically overseas. So that's how we approach it. We invest in all four of those areas, and but we see that digital payments is really kind of an infrastructure layer, and then we go from that. So that's from the sector perspective. Now I should say, in investing, you have stages of investing. You have seed stage, Series A, B, growth stage, PE, and then you have later stage public market investors. And IFC specifically is actually well suited for a Series B and above. So we invest at stages where the companies may not necessarily be profitable or may not necessarily have generated enough cash flow, but ideally would have already raised one institutional round by a Series A investor, and we come in afterwards and make the investment and then help the company grow. So we've taken, fortunately, 2 companies last year public. One was Fowry in Egypt, where we had invested indeed at a Series B round. There were other investors that came in before us, but we helped the company grow, raise additional capital, and eventually go public last year. We also invest at later stage, like Network International in the UAE, which is a large issuer, processor, merchant acquirer, and took that public on the London Stock Exchange last year. So that's kind of what we're doing. We also, I should note that we also invest in funds. So because we are a Series B, we typically invest in Series A funds. So Algebra in Egypt is one of our funds. We've also invested in Flat 6 Labs, which is an accelerator. Of course, I'm sure many of your participants would know. So we look at the whole kind of value chain from the acceleration stage, Series A, and then we come in afterwards.
That's very interesting, Kareem. Especially when I look at actually the first part when you're talking about the sector. So the first thing, you're just looking at the payment sector, especially in countries where this is early. And then once you start hitting saturation, you look for the kind of additional use cases, financial products that sit on top of it. Any examples of companies you've invested in recently that you're excited about, that you can actually tell us about, and how specifically ones where the model may be actually applicable to Egypt, or not in Egypt, but the model may be applicable to Egypt? I think that would be interesting.
Well, it's a good question. I mean, off the top of my head, let me say some global experiences that we don't necessarily have made investments in, but I think would be good reference points. Okay. So in the context of PSD2 that I was saying in open banking, there was a company that Visa recently purchased in the US called Plaid. And what Plaid did was basically provide a middle layer which connected all of the banks in the United States, or many of the banks in the United States, to an open API. So fintechs, in the context of, okay, look, we want to be able to access Ayman Ismail's account, rather than every fintech going to every bank and being able to make that connection, Plaid came in and was able to basically build that connection for the fintechs and aggregate all of those APIs and be able to connect the fintech providers to any of those accounts. So, and that was, you know, how a company like Venmo was able to connect to your bank account. You know, there's thousands of bank accounts here in the United States, and all you had to do is just do that, because Plaid was basically that middle layer, that aggregator. So I would highly recommend kind of looking at them as a business model. I would look at you know, an example of Marqeta here in the United States. Again, Marqeta, if you think about, you know, where things are going away from cards and new types of digital payment, forms of digital payment are being developed, Marqeta basically allows you to develop a program, whether you be a bank or a fintech, that with the infrastructure that they've already developed for either for either card-based payments or wallet-based payments, whatever it may be, it's kind of like a menu of options that will allow a startup or a fintech provider to be able to issue digital payments relatively easy, and gives that infrastructure. So that's a company that we're particularly kind of looking and interested in to see in other markets.
That's very interesting. Let me shift the conversation to a different direction. Everybody today is talking about COVID-19, and every single talk is called doing something in the age of COVID-19. We initially had that as the title and definitely changed it. So I cannot escape a session without asking you, what are the changes to that space based on COVID-19? Is it just accelerating the pace, or are there any structural changes that we may see because of that?
Yeah, it's a good question. I mean, look, I think we've been struggling with trying to answer the question. We are long-term investors, so we think, you know, 10 years out, right? And because our investment horizon is, for average investor, would be 5 years. Yeah. When you come, you need to exit, you need to sell the company, or somebody needs to buy the company, needs to think about another 5 years. So any investor needs to have at least a 10-year horizon to be able to make an investment. And I would say that in that 10-year horizon, COVID will really be a blip in the screen. It's in this space. It will not have, I think, have a dramatic impact on the sector. And therefore, we're really continuing the promise of fintech before COVID is the same promise that we see forward. In fact, it's just being validated in the COVID scenario, that people are realizing that, you know, you can do much more online, much more virtually. My own experience, I'm realizing I don't need to travel as much as I used to, and I can do these types of talks without having to be on stage and talking to a whole bunch of people, right? So, and sitting in my you know, bedroom in California. So that type of experience is really transforming people's minds on, you know, on kind of the usability and the need for digital forms of payment and how efficient they are in conducting economic transactions.
Do you see some use cases coming in as new areas of opportunities that are just becoming more relevant now, maybe not than
So
a year ago?
the distribution of social welfare is a big area that everybody's focused on. So the governments by the way, this is even in the United States, believe it or not. So even in the United States, the government, that when it wanted to provide the tax rebates to the U.S. citizens, some of them were not banked, and they really had a tough time being able to track down everybody. Okay, so especially those who needed the most. So those who didn't really need it the most were those who had bank accounts, who filed electronically, but those who needed the most probably didn't file their tax returns or didn't even have tax returns and don't have bank accounts. So reaching them is still a struggle, and that is across the board. Payouts of digital and payouts of social welfare is much better suited on a digital realm than it is through cash. There's so much inefficiencies with cash, and being able to know who you're distributing it to, whether they received it, etc. All of that can be done electronically. That is a big area, I would say, that in COVID-19 has really put focus not only from the government side, but also a lot of commercial entities are really focused on trying to be able to address that in a much more efficient way. But I would stress that I would not focus on developing a business model only for the COVID-19 scenario, because COVID-19 will pass. I think people will continue to conduct their lives as they did. The transition to digital is happening, and that's what you should be banking on, not necessarily what happened in COVID-19. If you could sustain your business during COVID-19, that will certainly be something that I think incoming investors later down the line will look very favorably, that you were able to withstand the most difficult economic period that we all know, and you were able to maintain business and grow. That will be a strong validation to your business.
You're absolutely right. One of the key messages I would always tell our startups is the biggest success for 2020 is probably survival. And then everything else will flow after that, and we'll figure out what we can work on it. As long as you're there, then other things will build up from there. Kareem, let me zoom in on Egypt. I think we've started with a global perspective and we zoomed in on Egypt. You have actually a lot of experience in the Egyptian market, specific experience from your experience with investing in Fawry and being on their board and looking at all the trends that are happening and their interesting success story from all the way idea to IPO in a decade and few years, which is great. So first, why don't you tell us a little bit about this experience? How can you build a company that is successful in a challenging market like Egypt in fintech, even before anybody else started thinking about that space, and you scale it with that experience? So, would love to hear the Fawry story from your angle as a board member and investor, who's also got perspective on other stories in different parts of the world.
Yeah, absolutely. So I think Fawry is actually relevant to the situation that we're in today with COVID-19, because I got to know the CEO, Ashraf Sabri, in 2010 when they were still in the beginning of launching. And at the time, they only had about $400,000 worth of revenue. And as a Series B investor, we typically wait until things have progressed. But I think one lesson here was that we built a relationship with Ashraf. We realized kind of his vision of what he wants to do, but it was too early. But he got to know us, and we got to know him over that period of time. 2011 happened, and that was basically the revolution in 2011, and we engaged actually in an investment discussion only 3 months after the revolution. So you would think in very difficult, uncertain times, you don't have a government in place. Things were people were protesting in the streets. You didn't have clarity on where the currency was going to go, but yet we believed so much in the opportunity that we were able to make the investment at that time. And we made the investment in 2012. And and at the time when really nobody knew what Fowry was, it wasn't a household name as it is right now. And people, in fact, many people in the investment community were saying, Fowry, you've never heard of it. But you could see kind of the roadmap of products and services that Ashraf had in his mind and that the management team had in their mind, and we could fully support it. And what was unique there is that, he wanted to tackle something, payments, it needs to be ubiquitous. You need to be able to capture as much of a market as possible. You need scale, and you need to as ubiquitous as possible. And he tackled something that was very unconventional to tackle, which was top-ups. Everybody has a mobile phone. Remember, in the context of the beginning of the discussion, we said everybody has a mobile phone. So that's the first layer to touch. If you want to go after payments, you can basically tackle that segment, and that can give you an entry point into becoming as widely used as possible. Right now, Fowry has over 30 million users that are using the Fowry platform because they touch upon basic services that everybody needs. And many people at the time, the conventional wisdom was that there was no money to be made in top-ups, that the telcos were going to squeeze you on the margins, and that you could make very little money. And yes, you could make very little money with the old distribution segment way of distributing top-ups in the past, which was more physical cards. I don't know if you remember, but yes, they basically, as scratch cards, and they basically introduced the electronic, which was much more efficient. And with that network, they were able to aggregate a whole bunch of goods and services to that merchant to be able to distribute. They still rely heavily on cash, but they were able to basically integrate a whole host through that pipe that first started with top-ups, a whole host of bill payment integrations that were critical. And that was one of the success stories that they had. And the other thing that they did is that they didn't necessarily go after the mobile wallet segment. In fact, in the early discussions on the board, we were saying, do you go to the consumer? And we said, and it was basically the premise of what I said is that who goes for the consumer would be better those who already have a consumer relationship, those who already have kind of a relationship, an electronic relationship. So the telcos should be in a better position to offer mobile wallets, because they already have that relationship with the consumer, and they're already a consumer brand that and can and should be a very good entry point. Fowry, to build a consumer brand is a much more difficult one. So so that experience was, I think the other lesson learned from the Fowry experience is that when you build it right, and you build infrastructure that's there to stay, and the integrations are sound, then it will last a very long time. We are now 8 years into the investment. We're still investors. We still see a lot of room for growth for the business. And I would, I think we discussed this actually a couple of days ago, and I was saying that, look, there is a lot of hype on the, in the consumer side, that people think that, okay, I just get, consumers and monthly active users and try to drive those up, and then I'll be able to raise large valuations and large amount of money. And those you may get lucky. You may get lucky, and you may be able to raise a large amount of money, and you may be able to continue on this business model of just spend to acquire consumers. But in a situation like COVID, those are the types of companies that will really feel the pain. But it's companies like Fowry that can actually grow in the Fowry in the COVID scenario, and that can have very resilient business models. May not necessarily have been very hyped up in the beginning, but we're able to build something that's very robust that nobody can really replace very easily.
I think this is very interesting, and thank you for delivering the message, because we always have these discussions with the entrepreneurs who want to burn cash on customer acquisition without having a sustainable economic model, unit economics. And we always tell them, well, you've got to think about your unit economics. Sometimes a more sustainable but slightly slower growth is more valuable based on the right economics than just acquiring customers based on subsidies and burning cash that you will run out of cash at some point in time. That's a very insightful part that I'm glad that people would hear it from you, not just from us. One thing that relates to the Fowry story, but also relates to the market in general, which is a change in consumer behavior. We've seen in some areas consumers adopting new technologies in a very slow way, and we see in other areas a very rapid adoption of technologies. You can see, for example, in China, a huge adoption of QR codes by merchants and consumers, which gave way for Ant and WeChat to really grow. But in Egypt, for example, we've seen rapid adoption of technology like Fowry, but slower adoption of mobile wallets, for example. So what's your thought about how do we accelerate that consumer adoption of those new technologies? How do we help kind of nudge the change in the consumer behavior in that area? Any thoughts on that, especially from your experience with Fowry or other similar plays that work with those types of consumers?
Yeah, because well, it goes back to what we were talking about again, is that the mobile wallets is kind of like a one size fits all. They're fairly commoditized. They offer pretty much the same type of service offering, and the consumer really can't differentiate, you know, whether it's this wallet, a Vodafone wallet, or a QNB wallet, or whatever wallet is out there. They fairly have similar kind of offering in general. I don't want to, you know, talk specifically, but I'll just say in general. And I think where the wallets will change is when you are really adding value and that experience. People are still used to cash, you know, for day-to-day activity, and it's still there. It still integrates very well into their life. They know how much money they have. There's no risk of it being lost. There's no customer service. You know, they go stand in line at the beginning of the month or at the end of the month, and they kind of withdraw their full paycheck, and they sit at home with their cash. They know where it is. They know how much it is. It's widely accepted. There's no battery technical issues, and the merchants want it more than anything else, right? And it's only when you start to see people resolving the merchant kind of resistance to accepting digital payments is when you're going to start to see kind of movement in that in more of a adoption direction. So, and to get the merchants, and this is one of the things that Fowry is trying to address, is basically to get the merchants to start accepting digital payments. You need to give them a value proposition that overcomes the pain of using digital payments. There is, and people don't recognize that merchants, especially offline merchants, I'm thinking about the grocery store on the end of the corner street, right? That merchant conducts their whole life in cash. They pay their FMCG suppliers in cash. They pay, you know, for their kids' livelihood in cash. They accept cash. It's always there. They always have it. Once you put it in a digital form, then they need to go and convert it into cash to be able to do their day-to-day life. And also they pay fees. They have to pay a fee for the point of sale terminal. They have to pay possibly an MDR fee for accepting the payment. There may be a chargeback. There may be settlement delays, so they may not get the money right away. They may get it in 2 or 3 days. They'll have to pay taxes for sure. So, you know, you have so much of this resistance at the retail level, especially at the micro level, to accept digital payments. But when you can overcome that, whether it is by, and the best use case is actually through working capital. If you can give that merchant kind of an incentive to start to declare how much they're making and to be able to pay the fees associated with accepting digital payments at the retail purchases, digital invoicing may also kind of be an impetus for this to start. But then you can start lending to that merchant working capital so that they can use it rather than using their own balances. They can start using it to buy Coke, Nestle, and sell in their stores. And that is could be a very lucrative proposition to the merchant and also the service provider.
That's very interesting, because I was asking you about the B2C part, and you took us to the B2B part, which is really interesting. Actually, I was going to ask you that we have specifically about the digital wallet penetration in Egypt. We have more than 16 million wallets, but the active users are actually probably less than 5%. Depends on the duration you measure them. Most of the transactions are, as you mentioned, peer-to-peer transfer, local remittances, bill payments. That's pretty much it. So adding additional use cases and adding additional acceptance outlets, that's the path to actually increase the adoption. And I think that's a very important message for most of the entrepreneurs. If you work on the B2B side, you're probably going to find a lot of very interesting opportunities, as you mentioned, especially if you provide them with additional services, working capital, and so on. So that's a very interesting angle, and I think opens the space for many people to look at the acceptance space where all the sectoral needs, it's not one size fits all, it's sector by sector.
Yeah, actually, I would just say one thing on the B2C, and maybe this is what the mobile wallets is, but what I see often, and particularly in Egypt, there's two Egypts. There's the compound, I would say the compound Egypt, those who live in compounds and Sit October and elsewhere. And you then have those who live in real Egypt, right? And many of the mobile wallets and maybe many of the solutions are geared to those who live in compounds, who already have, access to a bank account, already are banked, or, this is just another novelty that they have. But it's really when you can go into kind of the more rural areas, the more agricultural based rural communities in Egypt, and embed yourself there and understand their livelihoods and understand their economies. They have an economy, it's a very vibrant one. But unfortunately, the banks are not able to do that, okay? No banker is gonna go out there and reach those. And the telcos are the same. The telcos act very much like bankers. So you need kind of nimble fintechs that are gonna be able to go reach those communities, understand them, embed themselves. It's exactly like the fishermen that I was telling you about in Senegal. Find who they are, understand what kind of social media do they use. You're certainly not going to get them with a kind of a Google search engine optimization, marketing, AdWords. These are people who have kind of their own kind of environment that you really need to understand. You need to understand what their pain points are and how you can integrate into their life cycle. And that's when you're going to start to see greater adoption. I really do think it is not about consumer behavior. It's more about the technology, this kind of one size fits all technology that is being adopted everywhere.
I think that's very interesting, Kareem. But the challenge that we have here is, whenever you go to an investor, a startup going to an investor, someone like you, they will tell them, I want to see a big market. I want to see a huge addressable market because that's how I can calculate the potential. But now you're telling me go to a small niche market, especially in disadvantaged communities. Is there value there? Can I grow there? I start a business that's targeting the fishermen in somewhere. Is that the market that will attract an exception? How can I manage?
Very good question. Yeah, a very good question. So the key to that would be that your selling point is not that you've identified a niche and that's your niche and that's the niche that you're going to focus on, but that you have an ability to understand kind of niches and develop products for that niche and then aggregate them all into a viable one or multiple viable products that sit side by side. Okay. So, and that becomes the competitive advantage. Your ability to understand who your customer, it's ironic in the financial sector, we use this term KYC, knowing your customer, and KYC, knowing your customer in the traditional sense is Ayman Ismail, your Raqam Qawmi, your national ID card, and that becomes KYC. But if you think about real KYC, like the type of what Amazon, Google, Apple would know on me, they may not know my name. They may not know my social security number or national ID number, but they know what time I wake up, what time I go to sleep, who I'm talking to, what kind of things I'm searching for, where I am physically at any given point in time. So they have a very three-dimensional view. They may know more about me than I know about myself. And it is that kind of KYC that we want these guys to be able to do. And that's what you want to kind of embed kind of into your business model, in being able to understand your customer analyze what their issues are, and develop a product for them, and then be able to go from that segment onto another segment, and then go from that segment to another segment. And that can become a very kind of a strong proposition for an investor to really back. And you could be able to tell the investor, look, I'm going after this segment, but here are all the other segments that I want to go after, but I'm going after this segment. Prove yourself in that segment. And then the investor will say, okay, they actually did, she was able to do what, what she said she was able to do on that one. I can now support her in and growing in other segments. So that is a key aspect of this.
So a portfolio of niche markets, that might be the way to do that. I hope that you'd actually also send that message to some of the early stage investors who would push many of the startups into the generic markets where they have very little competitive advantage, rather than building on a niche market where they can grow quickly and own it, and then they can move into adjacent niches. I think that's a very important.
We're seeing it, Ayman. It's really, in some markets in Latin America, we are actually seeing people build very viable business models on very small niches and then be able to grow. And they look almost a little, they're very geeky. I mean, they kind of understand the user experience from the beginning to the end. And that's one thing that I would stress on the B2C model is don't underestimate the user experience. Jack Dorsey, who's the founder of Square and the CEO of Square, knows every single button on the front page of the Square. He talks about this in investor calls. And at that level, this is a company that's in the $60-70 billion, but he knows the app and what it looks like and what the user experience is. And that is really the key differentiating factor that I think that will differentiate successful businesses versus those who are going to get traction. Those are going to get better unit economics, because those are the guys who are really addressing a key pain point that others that are just, okay, I bought this, mobile wallet platform from some provider somewhere else, and I'm going to adapt it to here. And, it's not going to go far. No.
Talking about competitive advantage, one of the questions we have is, now I'm starting my startup. I'm in a market that's basically dominated from the one side by the banks, and the regulator is forcing a bank-led model. From the other side by the Visa and MasterCard, and from the third side, even those who made it, the Fawris and the like, Fawri, Aman, Masari, whatever is there. And how can I actually find a place for myself? It is very hard to get into that places. Banks are not excited about integrating with startups. And it's just very hard for someone to build a startup in a market like this. What's the entry point? What are strategies you've seen for effective entry points into tough markets like ours?
Yeah, I mean, I've always, what I've seen when there's over competition on the consumer side, I've always been telling people go focus on the merchant side, okay? Because on the consumer side, especially when you have thousands and millions of wallets, they all want use cases. They're all dying for use cases. So as much as you can then integrate into merchants and aggregate, don't compete, don't go where everybody else is competing. Step away and say, okay, on the merchant side, this is a segment that I want to touch, and I want to be able to aggregate for all of those, okay? Now, of course, in Egypt, you have Fawri, which is a dominant player that has actually taken that approach early on and has really focused on the merchant, and particularly the long tail merchant. This was a kind of long tail, meaning the small merchant that has been successful. But, there are competitors to Fawri, and Fawri doesn't, as much as I love Fawri, I would, I really do think that Fawri hasn't tackled everything. And like I said, on the B2B front, the B2B payments front, that's still virgin territory. There's still a lot of room there. And if you can start to analyze that in a little bit more detail, I would recommend doing that. Payroll is another area in Egypt that is fairly outdated. So if you think about large organizations still send payroll, often on Excel spreadsheets, to the banks. And, if you think about ADP here in the United States, ADP basically includes HR, payroll processing, And all of that needs to be integrated into some of these very large corporate, and that could be very lucrative. And then especially if you can do payroll along with payroll advances, et cetera, there is a huge market there. And that is a great feeder into all of those wallets. So everybody has a wallet. You can now do payroll processing directly onto the wallet. I would highly recommend looking into kind of an area like that. Lastly, I would say, I would ask the audience, how many of them have investment accounts? How many of them have a stock, something like a Robinhood here in the United States, which Robinhood basically allowed people, very small retail investors to invest in the stock market here in the United States. This is also very virgin territory. College students, this may be more for the affluent, may want to invest in the Egyptian stock market, may want to actually buy stock on Amazon and Apple and Google and other markets. How about develop a wallet that can actually, offer, people in Egypt an ability to buy stocks overseas, or even in the local market to buy stock shares in Fowry, which I highly recommend. That would be the kind of the scenario that I would recommend looking at.
That's wonderful. Any thoughts also? We have a question about the defensibility with investors. They're asking startups at very early stages, is your business model defensible? How do you design it to be defensible? And I think some of those conversations usually happen too early. But any thoughts on that?
Defensibility. Just a comment on the early stage investors in Egypt. I mean, they're still learning too, by the way. Yeah. I mean, so I have high respect for some of them very much, and particularly the algebra guys that we invested in. We, of course, we hold them in very high regard. But there's others, but they're still learning. Okay, so and I think they, they need to understand many of them come with a later stage type of mentality. So thinking about later stage, because oftentimes, even though they're Series A or seed stage investors, they need to carry the company much longer than a typical investor here in the United States would have to do. So here in the United States, you'd have a kind of an angel investor that would put in money with the expectation that there's likely, if this guy can win or can show some traction, they'll be able to get Series A easily, and then somebody else will come in with Series B, etc. In Egypt, there's probably a more conservative posture by the investors, early stage investors, because they have to carry the businesses forward. Defensibility, I think it is, I would not worry about defensibility early, okay? I would start, if you're talking about niche and understanding those niches really, really well, that could become your defensibility. I think it's not easy. Sometimes people can reverse engineer what you're doing, but still the DNA and the look and feel should be something that is really proprietary, very hard to just reverse engineer. So I would say don't worry about defensibility, at least especially if we're talking about still startups that are still thinking about how they're going to build their business. Just think about a viable business model that can at least address the real need, make some money or show some traction, and then start by building really quickly goods, integrating or having a roadmap of value-added services that you can add on, you'll be able to build a more defensible business.
Wonderful. Let me ask you about something that was in the news, and a couple of people were asking about it. The whole Facebook getting into payments and launching their payment on WhatsApp or on Facebook Messenger in Brazil and going into other places. Probably a bit of a late play compared to WeChat and Ant, but it's quite interesting. What are your thoughts on that? Do you see something like this actually working as another layer of global transaction infrastructure that's low cost? Would love to hear your thoughts.
And the reason why I'm laughing is when Bitcoin, hit 19,000, people are saying, "Oh, that's the end of fintech isn't Bitcoin." Everybody, that's the end of payments. Everything on Bitcoin that collapsed, and we know the outcome of that. The same thing with Libra. When Facebook came out with Libra, everybody went crazy. thought that Libra was going to dominate payments because they have 2 billion people or more on their network, and that if they now somehow introduce the payment method, that all of a sudden everybody's going to be on Libra, and everybody else, all of the payment companies that we have invested in, are going to disappear. I think you get the same reaction with a WhatsApp kind of. WhatsApp is good for, again, P2P is easy. Everybody can do P2P, okay? That's not a problem. And that's fairly ubiquitous. What's really difficult is integrating into merchants' kind of day-to-day activities by vertical. So think about healthcare, think about education, think about retail, manufacturing. Imagine billing, all of the billers, the service providers. Think about how difficult it is to really integrate into them. They have their own ERP systems. They're not going to all be on WhatsApp. Your biller, your electricity provider is not going to easily integrate on a WhatsApp. It's going to take some time. I'm saying it could. WhatsApp has a large footprint, and if WhatsApp said that everybody in Egypt has ability to make a payment and integrates, then some of the billers may start to say, okay, let's try to see if we can do this more seamlessly, and the merchants may do the same. But it's not going to happen overnight. It's going to take a long time. I need to stress that the reason why it's so difficult, payments needs to be integrated into economic activity. And remember the beginning of the discussion that these are deep integrations that are going to happen over decades, not over the next 10 years. I wouldn't even say over the next 20 years. These are going to happen over a very long period of time. And WhatsApp won't be able just to turn on a switch and everybody become a payment platform. There's regulations also that are going to come in and justifiably say that, look, that Crimea example. Imagine the Central Bank of Egypt having all of the payment on WhatsApp. Okay, it's the same example of Visa and MasterCard. It's just a different form, but you don't want a U.S. company to dominate your payment infrastructure. Look, I can say that very candidly, even though I am technically a U.S. citizen. So
that's very interesting. I think probably, as you say, it's probably going to be more of an add-on to the Facebook getting into shops and commerce. So you can buy your product and then you can pay for it. So it's a facilitator for that. And in a place like Egypt, I think if they operate under the mobile wallet infrastructure, that would be a great way for everybody. They can just be like Vodafone Cash, completely interoperable, completely locally operated. But at the same time, they're having their ability to add the features that they want and the usability of Facebook. And maybe that would be a great way to support the growth and bring more liquidity to the mobile wallet infrastructure. So that might be actually an interesting outcome if both sides accept that. So as we get closer to the end, and this has been a fantastic conversation going from the macro global trends and zooming in all the way to what's happening at Egypt to all the way to the local part. We have many aspiring entrepreneurs here, and you're someone with a lot of experience in fintech, especially on investing, which implies a perspective on the potential viability of that business. What would you tell them? Where should they build their ideas? What areas should they focus in? How do they build kind of a successful company that you and others would be interested, not just in investing in, but also in doing business with and using the product? Yeah. So final thoughts on that.
Yeah, sure. Final thoughts. I'll say things that are not fintech related actually at all. Okay. I'll tell you, first of all, you're going to be dealing with egos. Okay, so you need to really, because payments and finance in this world of integration, okay, it doesn't stand on its own. You have to build partnerships, and those partnerships rely on relationships. It's not a technical. If it was a technical problem, this problem would have been solved a long time ago. It is often the barriers and the friction that are related to this is actually getting people. Partners to think differently and persuading them. So, really understanding psychology is actually a very important part of this and not to be underestimated. You may have the most brilliant technological solution and may have identified the most, significant use case in Egypt, but you need to build partnerships. You need to be able to sell it to the users, and you need to integrate a lot of other products and services, and you can't alienate those people. You have to recognize that banks are fearful of the fintechs because they get so much, hype and attention, and they think that they're going to dominate and they're going to take a. If you go in, really with a very big ego, thinking, that it all, you've solved all of these problems, these bankers are outdated, they don't know what they're going to do, you're never going to be able to get very far. You need to be able to kind of say, okay, this is where I fit into it. Eventually you'll be able to get big, but don't rattle those, and really be careful on the psychological aspect of this. The other aspect is choose your partners wisely. I think, whether they be investors, whether they be kind of your partners as co-founders, these things will have a lasting impact on your business. And oftentimes many of these businesses kind of fall apart because it's like a marriage. If you don't know who your partners are, you come into a disagreement and things fail. They don't fail technically, they don't fail because of the business model, but they fail because of the personal relationships between the co-founders. Or if you get funding from somebody that's easy money, and that may not necessarily have a very good reputation, credible investors like ourselves will look at your cap table and see who your backers are. And if there are any red flags associated with them, we're not going to touch. So, and that will go for many in the investment community. I would also say that will also go with again, if you're trying to do integrations, the banks are very careful on who they integrate with, and they want to know who your backers are. And you have to have very credible names and try to choose those very carefully. Those would be the two, besides all of what I just talked about segmentation, don't go where the competitors are, try to find niches that are important. All of that, those I think are understood at this point.
Yeah, so at the end of the day, we can talk about digital and transactions and money and everything, but it boils down to pure relationships between people and real trust between people. That's actually what makes someone closes the deal, do business with you, join your team, buy your product, and really do business with you. And I think that's a great message to end on. Kareem, this has been a fantastic conversation. I am very happy that we had the opportunity to talk about everything from the global trends to what's happening in Egypt to opportunities. I think many of the entrepreneurs here will take some of your thoughts and embed it in their startups, and we look forward to see amazing startups coming out of them. I mean, this is what we work for and live for, is basically pushing startups in Egypt, pushing startups in general and fintech specifically, and producing great companies that are solving real people problems, even before we get into investments in any of these things.
Yeah.
Thank you, Kareem. Thank you,
Thank
Bilal.
you.
And thank you to everybody.
But before we leave, I just want to say just a word to the Egyptian entrepreneurs that are on the table. Look, I've been at IFC 17 years. I've done investments in probably over 20 countries. And I'll say this very sincerely. I mean, the Egyptian entrepreneur, in my mind, is probably the most innovative entrepreneur out there in the world. I can tell you sincerely, it's not because of my Egyptian origin, but I can see that you guys, the Egyptian entrepreneur has kind of ingenuity, problem-solving skills that you rarely find in other markets. And I would say that, you are in an excellent market. It is very large. There are many other markets in the Middle East are much smaller in size, and you find entrepreneurs that have much more ambitions. And I want to see the Egyptians having the same level of ambition, because they're really very much capable of doing so. So good luck. We'd love to support you guys in any way we can. Happy to help out.
Thank you so much
for inviting.
And that's a great message to end up with, and lots of positive energy. And I hope by the end of this week, we're going to have 10 amazing startups coming out of the PayHack. And hopefully by the end of the summer, we'll see some of them even getting into the VLab acceleration cycle.
Excellent.
Thank you, everybody. Thank you,
All right. Thank you.
And we're concluding our talk.
Thank you. Take care. Bye-bye.